Hello, everyone. I hope all of you are doing great. Welcome to the AAA September 2026 Game Changer webinar. And I really hope so that this session, in fact, these couple of sessions are going to be super helpful for you. And I'm sure if you are going to be consistent throughout these two sessions, if you will have greater concentration, I'm sure at the end of the day, you will have a much better exam preparation. You will have a lot of clarity. You will have a lot of confidence going forward. We still have got more than a month left, so I think this is a huge blessing. So we have got good enough time, and we can actually ace this exam in the remaining time. But if that has to happen, you need to understand what is AAA, what is the exam format, what are the common reasons behind the failure, and more importantly, you need to have a plan which is neither too ambitious nor too easy. It has to have a right level of difficulty. So in this session, I will give you a plan as well. So let's proceed now. And before I actually proceed, tell you that this session is intentionally divided into three layers. So there are three different things which we will discuss in this particular session. In the first part of this session, which is going to last 15 minutes approximately, I will introduce the paper. I will tell you the few common characteristics among the failures, few common characteristics among the successful students, and few tips and tricks in relation to the paper itself. So that's going to be the stage one of this particular session, followed by the stage two, where I will discuss, well, rather, I will share a realistic plan, a plan which I've created with all my pure intentions and energy, and that plan will incorporate the top 30 questions which you need to master in order to ace the exam in flying colors. So that's going to be the stage two. Hang on, I will share the plan. I will not only reflect the plan, I will also share the plan as well. Then, last but surely not the least, the third and the final stage of this particular session is going to be where we will discuss the backbone of AAA, which is risk of material misstatement. And I'm sure if you will attend the entire session with greater concentration, at the end of the session, you will be a better AAA aspirant. You will have a lot more clarity. So I think let's not waste any more time, and let's go towards the stage one. And here we go. Stage one. Okay, so, well, my name is Ahmed, and I am your tutor for the paper Advanced Audit and Assurance, which is undoubtedly the backbone of your qualification. If you want to become a chartered accountant, you need to understand that reporting and auditing, they are actually the backbone of your qualification. So welcome to AAA, and I'm sure with the right plan and with the dedicated effort from your side, together we will have a winning day on Monday, 7th September 2026. Definitely all eyes on Monday, 7th September 2026. Well, you've got extra 4 to 5 days. Let's make the best use of these extra 5 days. It is a blessing indeed. If there is anyone out there who wish to join the AAA batch for the September or maybe December 2026 exam window, you are more than welcome. You need to contact VIFHE's admission department through the WhatsApp text, but more practically and ideally, you should straight away go to the VIFHE's website, and you can always join the batch through the website. And by VIFHE is going to start the revision courses for all the subjects. So that's going to be really important. Okay, moving forward. Yeah, a brief introduction about me. I teach BT along with AA and AAA at VIFHE. By the way, VIFHE is a gold online ALP, and when I say gold, it is only because of the extraordinary and consistent results which we produce from one attempt to the other. We have got students from more than 146 countries for the quality itself. I was part of the ACCA's elite panel where ACCA selected me for the sake of practice to pass webinars for the entire MENASA region, which includes Middle East and North Africa as well. So yes, I conducted webinars for both the AA and the AAA. Few shining stars. These are the recent position holders for the paper AA, and these are the recent position holders for the paper AAA from the platform of VIFHE. So yeah, I am, in fact, we all are very proud of them. The first position in the entire Caribbean region. Azhar scored first rank in India in the AAA paper. Again, very recently, hardly a month ago, we came to know Khalil Martin scored again first position in the entire Caribbean region. Akanksha Agarwal, she scored 78 and she was definitely a bright star in the AAA course. These are few recent scorers. So let's move forward. Hardly 1 week ago, we came to know Ashfa has scored the first position in Sri Lanka. So these are the few things which I'm sure these things are going to inspire you. Ashfa has scored first position in the window. Moving forward, definitely in the second stage of the today's session, I will introduce the master file, the top 30 questions, what live sessions you have missed, but how can you catch up, what live sessions are still pending, what is the importance of technical articles which are covered through the lectures. You will have an ultimate WhatsApp support leading towards the final mock exam, and your mock exam will be marked and you will definitely get the feedback. We will have the mock debrief session as well, but apart from that, you will get the feedback personally as well. Yes, this is the plan which is very important. Today is 4th August. So we have got webinars on 4th and 5th August respectively. VIFHE is going to start the revision course from 5th, but I've assumed that we will be starting the revision batch from 6th August. We will have multiple live sessions from 7th to 18th August. Mock exam on Saturday, 22nd August, followed by the mock debrief session on 1st September, followed up by your final exam itself, which is going to be on Monday, 7th September, the D-Day. Okay, let's quickly talk about the course content. Always try and prepare syllabus areas A, B, and C simultaneously. Without having extraordinary grip on syllabus area B, you can't move an inch. To be very honest, when you will explore full 50-mark questions, you will face ethics. Even when you will go into the section B of your exam or the practice kit or the past paper questions, you will realize one of the question will always be focused on syllabus area E, completion, review, and reporting. That is why I always emphasize this area a lot. But having said that, another 25-mark question might be a combination of other assignment along with ethics. So ethics is going to be a never-ending story. You have to ensure that syllabus area B has to be a very, very strong area. How can you make sure syllabus area B is really strong? Well, go and attend my lecture called Ethics Knockout Punch 1 and 2, and then attend the live session 1, which you have missed, but the recording is available. And all of a sudden, with the help of 6 to 8 hours of practice, after attending those lectures, all of a sudden, your preparation for ethics would jump from 2 out of 10 to 10 out of 10. Yes, you can expect 10 or more marks on ethics. Maybe 14, maybe 18, maybe 20. You never know. It can be tested within the question number 1 and in section B as well. So be very well prepared for syllabus area B. Quality management has always been a hot cake, especially post COVID-19. So quality management is something for which you must attend a lecture where I've covered the 3 auditing standards on quality: ISQM 1, ISQM 2, and ISA 220, and then approximate paper questions, and you are done. For planning and conducting an audit of historical financial information, yes, risk assessment is super important. Business risk, risk of material misstatement. In fact, we will be discussing risk of material misstatement tonight in this lecture. completion review and reporting is super important because 125 mark question will come up from syllabus area E, and other assignments and current issues are equally important, and we will be paying respect to these areas as well. The exam format, I'm sure we all are familiar with it. The question number one will have 40 technical marks followed by 10 professional skill marks. And in the section B of the exam, we will have a couple of questions having same format to 20 technical marks plus 5 professional skill marks. So, okay. What about the pass rates of AAA? Well, let's start exploring the pass rates from the beginning of 2024. So March 24, June 24, September, December 24, 37, 38, 37, 38, 39. So more or less the same. Let's go for the year 2025. 39, slight improvement, 40, 40, back to 38. So I won't say there is any change. Let's talk about the two results we had so far in relation to 2026. Now the second last one, big improvement, 42%. But then what? A big dip, 39%. So overall, if I have to come with an average number, well, 40 or maybe 39 would be the average number. So 39, 40% is the global pass rate. So if you recently attempted SBR or SBL or even AFM or maybe ATX and you passed the paper somewhere around 50, 51, 52, 53, please wake up and smell the coffee. You got to raise the bar. You got to come up with a far better effort. And the good news is you still have got solid 33 days, 34 days left in the final exam. So if you will stay disciplined and honest with yourself, if you will follow my instructions with the help of this lecture, followed by multiple live sessions, and more importantly, through the WhatsApp, I can give you an absolute assurance on that you will ace the exam. It's all about staying committed. It's all about staying disciplined. One fine day where you are absolutely motivated will not make you pass the exam. Maybe you will have greater or highest level of motivation on particular weekends, on particular days, but you got to realize and you got to understand motivation will not take you to the places. Consistency will make a huge difference. So I don't want you to study 14, 15, 16 hours on coming Saturday and Sunday and do nothing over the weekdays. I want you to have a consistent approach. You have to the weekends more fruitful. You have to make sure that the weekdays are fruitful as well. It's not about relying on weekends. So if somebody has got a pathetic plan of just relying over the weekends, well, how many weekends? 2, 3, 4, 5. You have got 5 weekends before the final exam. So please do not just rely on weekends. So yeah, the question number one will always be set at the planning stage where you have to evaluate and prioritize risk of material misstatement. You have to evaluate the business risk as well. And the section B of the exam, one question will always be exclusively on completion, review, and reporting. And the other question could be a combination of ethics along with other assignment. You never know, maybe quality management with ethics, maybe quality management with other assignments. So there are multiple possibilities when it comes to the other question within the section B. Before we actually finish off the first stage, let's explore and let's recall why 60% or more students tend to fail this paper. So if the global pass rate on an average, if it is 40%, it means 60% of the dedicated students, they also fail the paper. But why is it so? Well, you will often hear about poor time management. I couldn't finish the exam. All these things, they overlap with each other. So poor time management, poor typing speed, lack of exam practice, I was too tired during the exam. All these things are interchangeable. And in simple words, if you will not work on your past paper questions through typing, eventually you will pay the price. So if somebody has covered all the important questions and the lectures. And if you are absolutely crystal clear conceptually, mind you, you are not ready for the exam. You are only ready for the final exam, provided you have actually typed the answers as well. So poor time management, lack of exam practice on ACCA's practice platform, you can cover all these factors and you can overcome all these hurdles by making sure you will not just read the top 30 questions, you will not just attend the lectures relevant to the top 30 questions, you have to ensure that you are actually typing them as well. And when I say type them, I think you need to type them at least twice, or maybe if you struggle with theoretical papers, you might have to type them thrice. But twice is a bare minimum number. Automatically, when you will start typing the answers, automatically your skills and your competence in relation to the professional marks will improve as well. Having said that, uh, after a week or so, I will probably I will have a live session relevant to this. No, not the, yes. I will have a live session in relation to this where I will try and cover all the professional marks, all the professional skills from commercial acumen to skepticism, everything. Everything will be well covered. Anyways, let's go back to the. Okay, so you need to work on your professional skill marks as well. Stop idealizing the ideal answers. You cannot replicate the ACCA's official answer. You need to understand the drafting technique and you need to draft the answer according to the technique again and again, and automatically you should not ignore syllabus area B ethics and you should not ignore syllabus area F other assignments. Why would I put this particular thing over here? Because what I've observed, many AAA failures, they think or they assume that they are well prepared for ethics, but it is not the case. And same goes for the other assignments. Yes, assignments or tests are very, very, very important. Focus on your drafting technique. Make sure you will attempt multiple mock exams and make sure at least one of the mock exam is actually marked by an expert tutor. So this is really, really important. Okay, I think I am done with the first stage uh, or the first part of the session. Yes, we need to work on the core concepts and knockout punches. We'll be working on drafting technique, assignments, and marking. Mock exam is important. WhatsApp support is important. And if you will follow these instructions, I'm sure you will ace the paper on Monday, 7th September. So this is it. I am done with the first stage. And this first stage was all about the overall introduction of the paper, and it's time for me to move forward towards the second stage. Give me a second. Okay, second stage, which will not last more than 10 minutes. So hang on. And maybe this is one of the most important stage for you, especially for someone who is just going to start his or her preparation. So this is your AAA final revision plan. And this plan includes the master file, the top 30 questions, multiple live revision sessions or practice sessions. You need to cover, or you should not ignore technical articles. All the lectures given to technical articles are super important. WhatsApp support is very critical. Your final mock exam and the mock debrief and the mock marking itself. These things are going to be super important as well. Give me a second, please. Okay. Okay. So now, few important dates. We have got AAA webinars on 4th and 5th August respectively. Although VIFHE is going to start revision course from tomorrow, but I am assuming for everyone, for the regular batch students, for the reset batch students, for the revision batch students, I am assuming that the batch will start from 6th August after the webinar. This is my assumption. From 7th August till 18th August, we will have multiple live sessions. The final mock exam is on Saturday, 22nd August. We will have the result starting from 25th August. Some of you will receive the result on 25th, 26th, 27th, 28th. But finally, everyone will end up getting the result, and we will have the mock debrief session on 1st September. By the way, we have got the final exam on Monday, 7th September. Now, this is the plan. 6th August to 8th August, you need to cover syllabus areas A, B, and C. And ethics knockout punch 1 and 2 is very, very, very important. Followed up by live session 1 on ethics, followed up by a lecture on quality management where I've covered all the standards, followed up by live session 2 again, which was based on quality management. And here your top 6 questions. Then from 9th August till 13th August, you need to invest 5 days and you need to cover uh, 8 full 50-mark questions in Core, Magenta, Winberry, Hammer, Hart, Speedy Style Company, Mistral, and Adams. Then, uh, by the way, there are 7 knockout punches on procedures, by the way. And then you should attend the live session 3 as well. Again, if you missed it, it is available through the LMS. The recording is available. Then 14th August till 17th August, you need to cover syllabus area E. All the lectures where I've covered technical articles are important. And for the syllabus area E, because these are 25-mark questions rather than full 50-mark questions, I came up with top 10 questions starting from Kilmister till Cydonia. And then last but surely not the least, syllabus area F and G, which covers another 6 questions. So this will end on 20th August. On 21st August, you need to have revision. How? Well, I will tell you through the WhatsApp. Then on 22nd August, which is Saturday, you will have your final mock exam. From 23rd August till 6th September, you will have another 15 days. And for those 15 days, I will give you a plan. But there is a huge possibility that you might be feeling uncomfortable right now by just thinking, oh, on 23rd August, we will have another plan. Not really. Don't worry. For the last 15 days, I will not come up with any new lecture. For the last 15 days, I will not come up with any new question. For the last 15 days, I will not say, okay, guys, good, you have prepared top 30. Now here is another top 30. Not at all. Don't worry. I will just make you solve past papers where you will face the same top 30 questions, but I will make you more exam focused, more time bounded. I will make you read few examiner reports, but I promise that I will not come up with a list of new questions. In fact, to be very honest, if somebody has covered these top 30 questions, you have covered 2022, 2023, 2024, 2025 past papers already. So these are all latest past paper questions. So for example, if you talk about Encore, this is 2022, Magenta 2023, Hammer 2024, Hard 2024, Speedy Style and Mistral 2025. So it's not about that for the last 15 days, I will come up with a new plan which is going to be a painful plan. Not at all. I will somehow make you revise everything what you have already prepared. So when the result came out, I came up with my top 40 questions. Now, because we are only left with 33 days, I have squeezed, and this is what I always do. I've squeezed the top 40 into top 30. But if there is anyone who wants to have more preparation, Maybe if you are a full-time student, maybe you are already done with the top 30 questions. Here is a list of my extra 10 questions. So if somebody is going to prepare these questions as well, that is the 30. So the first question that reflects tendering, and there are multiple questions. So I think most of these questions are already available in the master file as well. So what is the final note? All the lectures which I have mentioned in the last 5 to 10 minutes, all the technical articles, all those past paper questions, let it be top 30, all I think everything, most of them, 90% of them are available through the VIFHE LMS. The lectures are available. In fact, the notes are available in the master file. So you need to focus on the drafting technique first. You can't simply go on to the past paper questions. You need to grasp the drafting technique, and then you need to practice the top 30 questions at least twice. And if you will stay disciplined, if you will stay consistent, and if you will not have an extraordinary Saturday and a pathetic Friday, or a very weak Thursday, no. If you will have disciplined week after week, you have got 4 to 5 weeks, I'm sure you will shine like a bright star on the final exam day. So this is the stage 2 of the today's session. And now, well, all of you are more than welcome to use the chat box. If you have got any concerns or queries, I am happy to answer. If you have got any concerns or queries, there is only one trick. VIFHE is going to start the revision batch from tomorrow. So if there is anyone who wants to enroll, you can always enroll yourself starting from tomorrow. If you will hit the website right now, you will not have access to the revision course. So you got to check out the website tomorrow. I have assumed that we will be starting the revision day after tomorrow, that is on 6th August. Now I'm done with the stage 1. I'm done with the stage 1 and the stage 2. If you have got any concerns or queries, please share it with me, and I will do the stage. Sir, uh sir, okay. Okay, so I will share this planner document and the master file in all kinds of group. In fact, in the global groups as well. So I never restrict these things. So I will share the planner document and the new master file for the September 2026 in the announcement WhatsApp group, the VIFHE's paid WhatsApp group, and even in the global WhatsApp group as well. Anything else? Anything else? Am I done? Am I clear? Okay, now I've got a question. Okay, I've got a question from Kabir. Hello, sir. I've began my preparation today itself. I don't have enough time to cover all questions and videos on LMS app, but if I follow the revision plan you provide right now, that will be enough. Well, yes, if you will, if you're running out of time, if you are extremely busy, so obviously you have to make certain compromises, but at the same time, there are certain things which have to be your strength. And I think this revision plan has to be your strength, and this is something which you need to follow, and this is something where you should not make any compromise. So yeah, you got it right. I was on syllabus area E as per the current plan. Are we now following this plan shared now? No. If you are already part of my regular batch and you are already preparing syllabus area E, you should continue with that. So if somebody is already part of the batch, you should continue with whatever you are doing. If somebody is already part of the batch, but if he or she feels lost, you have prepared nothing over the last 15-20 days, this plan is for you. If somebody is considering joining the batch starting from tomorrow, this plan is for you. Is it clear now? Not all the questions are available in the CB. Yes, ACCA practice platform always have the most recent questions. It's okay. It's okay. Okay, so finally I've got couple of confirmations which is very important for me. Claire, thank you. Yes, Claire, thank you. That's great. Most welcome. That's perfect. If someone is halfway through the syllabus, they can join the revision camp. Well, that depends. If you are not part of any batch whatsoever, then you are more than welcome to join the revision course. Yes. I think, guys, I think I've answered all your queries. If there is anything which remains unanswered, please let me know through the chat box. Otherwise, let's move. Only I believe there are two concerns right now. There are two concerns right now. Concern number one, what if I am already part of the VIFHE AAA regular or the reset batch and I'm already up to the mark with a plan shared earlier on? Well, in that case, you should continue with that plan. But if somebody who is willing to join the batch now from tomorrow morning or maybe day after tomorrow, well, this plan is a perfect plan for you. Second question, I think, which I've received through the direct message, what about the working professional? What about the working professional? Working professional, well, you can ignore the extra top 10 questions, well, from 31 to 40, but I think you need to make the best use of the top 30. If you will say, okay, squeeze it further, I might squeeze it from top 30 to top 25 or 24. But to be very honest, I can't make it a top 15. I can't even make it a top 20. So even if you're a working professional, you might not type the questions thrice. You might not type each and every question twice. But as a starting point, whenever you will start solving questions relevant to a particular area. For the first few questions, I think you need to type them twice. And as a result of that, your confidence, your vocabulary, your professional language, they all will improve dramatically. And as a result of that, you will be in a position to complete the top 30 questions. For working professionals, such as Pavan, I've got another advice for you, and that is don't just rely on the exam preparation leaves just before the final exam. Why don't you get sick leaves over the coming weekend? Make sure you have to get Wednesday, Thursday, Friday as your sick leave, followed by Saturday and Sunday. So if you will invest the next weekend or this particular week, I think you can significantly boost your chances of passing the paper. Are all these questions available on the portal with answers? Yes. Okay, thank you very much. I've received message from Pavan. He's saying thank you for the advice. Most welcome. Okay, Azan, thank you very much. Thank you. Nice to see you. That's great. Okay, another question from Tasneem. Hi, sir. I'm part of the regular batch, but I haven't started. I have access to revision plan. And yes, you will have access to everything. Definitely. If somebody is a student from regular batch, you have access to each and everything. Can we get a consolidated drafting technique document? Drafting technique which covers every syllabus area. Well, get hold of the master file. Guys, I think I am done with the stage one where I have introduced the paper, and I am done with the stage two where I have shared a realistic plan. And this plan, trust me on that when I say you will have a winning day on Monday, 7th September 2026. So thank you very much, Noor, for your kind words. Thank you. And I think Noor is absolutely right. We should move forward and we should look ahead and we need to be optimistic. So, Noor, you are absolutely right. I think Noor, we should continue and we should move forward towards the stage three. So that's great. Let me go towards the third stage. Give me a second, please. Okay. Okay. So welcome to this extremely important session. Now, in this session, we will be heavily focusing on one thing, and that one thing is going to be risk of material misstatement. Guys, when you will attempt your final exam, or maybe when you will attempt your final mock exam, one thing is for sure. The first question will always be set at the planning stage of the audit. You can have one or maybe two clients, maybe a group of companies. One thing is for sure, your examiner will always ask you to evaluate and prioritize the risk of material misstatement. This is a sure short exam requirement. Evaluate and prioritize the risk of material misstatement. And the bad news is, or I should say, the sad news is, although there are more than a dozen past paper questions available through the exam kits, through the ACCA practice platform, along with the examiner report, still students tend to fail this particular exam requirement horribly. Now, any one of you who's listening to me right now, live or recorded, one thing is guaranteed, that you are already aware that risk of material misstatement will come up in your final exam. Isn't it? Are you not sure about it? The answer is yes, absolutely. And the sad news is you will have a lot of exam preparation relevant to the same as well, but still on the final exam day, you will commit all kinds of mistakes when it comes to risk of material misstatement. The question is why? The answer is because many AAA students will try to answer the risk of material misstatement question in different ways. They will answer one particular risk of material misstatement with X philosophy, and they will try to answer another risk of material misstatement with Y philosophy. Sometimes they will amalgamate X and Y philosophy. Sometimes they will use something out of nowhere. Let's call it the Z philosophy. My simple answer is, or my recommendation is, or the cure to this disease is, try and understand one drafting technique, understand every bit of it. Once you are absolutely crystal clear with one single drafting technique, which I will teach you in this session, practice multiple questions using the same drafting technique. And no matter what kind of paper comes up in the final exam, stick to your drafting technique, which you have practiced. So this lecture is going to be really important, and this lecture can make you score 20 out of 20, 22 out of 22, because typically speaking, there are 20 marks in relation to the risk of material misstatement in your final exam. So please concentrate. This lecture is very important because this can actually make you ace this particular topic, and we will definitely crack the risk of material misstatement in this lecture. So I need your full concentration for the next 1 hour or so. Okay. Okay. So risk of material misstatement, a complete exam technique guide in relation to the question number one. So when you will attempt an assignment as a test, when you will attempt the final mock exam, which is truly marked, and you actually get an honest feedback rather than a chat GPT kind of a thing, when you will attempt your final exam, the ACCA's final exam, you will have this music for sure in the question number one. So the question number one, according to the examiner, will always be set at the planning stage, and the examiner will always ask you to evaluate and prioritize ROMM, the risk of material misstatement. Now, let me give you an overview of this session. So what are we going to study over the next 1 hour? And that will change the game. After 1 hour, you will be the master of the 20 marks. So please concentrate. So what's the overview? Before we begin, let me give you a clear picture that what I am about to cover in this session. So this particular document, this particular lecture, which we are going to explore today, I have divided this into 5 sections. And mind you, section 3 is the do or die. I've divided the entire topic or the entire lecture into 5 sections. In the section number 1, I will teach you what is question number 1 of AAA and how many marks are available for you, which many students leave on the table. So they assume they are well prepared for it, but as a matter of fact, they are not. In the section number 2, so once we all understand what is question number 1 and how many marks are at stake, in the section number 2, I will teach you the drafting technique for ROMM. A drafting technique which consists of 4 steps. And if you will apply those 4 steps, you will score full marks. Section 3, I will teach you about International Accounting Standard 36, impairment. And with the similar logic, you need to grasp multiple other accounting standards as well. So for this particular lecture, my focus will be on IAS 36. We will discuss when to impair, and if we have to impair, how to calculate impairment, and what is the connection between impairment and an insurance claim. Is there any interaction? Do they nullify each other? So these are the 3 important things which we'll discuss. In the 4th section, as a tutor, I always believe knowledge is important, but it is not enough without relating the knowledge towards the past paper questions. So many AAA students tend to ask me, are technical articles important? I always say technical articles are important only if you could connect the technical article with the past paper question. So for example, yesterday or probably last night, I was having a discussion in relation to a standard, an auditing standard, which is auditors report to those charged with governance. And yes, there is a technical article for that under the category of syllabus area E. So auditors report to those charged with governance. I believe that is ISA 260. Well, that technical article is important, but it is only going to make a huge difference in your exam preparation, and you will pass the paper provided you will connect the dot. Once you have understood the technical article, you have to relate that technical article with multiple past paper questions such as Kilmister or Sidonia. If you are not connecting the technical article with the past paper question, there is no point of reading the technical article. Well, with the similar logic and with the same ideology, this particular lecture, when I will teach you the drafting technique in the section 2, when I will teach you the accounting knowledge in the section 3, there is no point of finishing off the lecture without relating the same with the past paper questions. So I will explore Winberry, Mistral, and Encore, and then a summary at the end of the session in the section 5. So this is how we will proceed, and this is how we will move on. In the section number 1, we will discuss what is question number 1. We will definitely follow the sequence. We are not going to make a compromise on section 3, which is about the accounting knowledge. And I will request you to attempt the past paper question as well. And you need to apply the 4-step technique, and then we'll have an overall revision. This is it. I am moving towards my first section. Guys, how many sections we have to explore? 5. On your screen, your first section. That's it. Oh, from here, section 2 will start. So this is your section 1. We need to cover 5 sections, and this is your first section. So please concentrate. When you will attempt your final exam, the question one of the AAA exam will always have a 50-mark case study question. Yes, we all know that. And that question will always set at the planning stage of the audit. And it could be multiple engagements, one engagement or maybe more than one engagement. So for example, in December 2018, ACCA came up with a question called Redback Sports Company. We were the external auditor of Redback Sports Company, but we were also considering appointment of another client operating in the same industry. So it could be more than one client. So for example, it could be a group of companies. Examiner will ask you to evaluate business risk. Maybe examiner will ask you to recommend audit procedures. Maybe examiner will ask you to evaluate ethical and professional issues. Maybe examiner will ask you to consider certain responsibilities in relation to laws and regulations. But one thing is for sure, examiner will always ask you to evaluate and prioritize significant risk of material misstatement. It is a sure short thing. When I always say in AAA, there are two things which are very much guaranteed. Number one, you will face a question called evaluate and prioritize risk of material misstatement, and you will face a 25-mark question in relation to syllabus area E. Now, this particular article or this particular lecture will focus on risk of material misstatement. So we are not going to have discussion on procedures, on ethical issues, not even on business risk. I'm not going to have discussion on business risk. I will have a discussion on business risk maybe in the tomorrow's lecture. But today or tonight, I will be focusing on one thing, and that is risk of material misstatement. Now, after reading multiple examiner reports, what I realized that students can actually identify risk of material misstatements pretty well. This is not my observation. This is examiner's observation, which I understood by reading multiple examiner reports. So you don't have to. Students can identify risk of material misstatement, but they struggle to evaluate them. And as a result of that, they fail. Why do they fail? Because majority of the marks within a risk of material misstatement question are awarded for evaluation of the risk of material misstatement, not for the identification alone. So simply spotting a risk from the scenario or maybe naming a standard will not make you pass the exam. So if you truly want to pass the exam, well, let's go to the section 2 where I will bridge this gap. What gap? Many AAA students are identifying the risk of material misstatement, but greater majority of them are struggling with the evaluation. But according to the marking scheme, according to the examiner report, majority of the marks are available for the evaluation. So we need to learn evaluation. We need to practice evaluation, right? Now let's go for the drafting technique for the risk of material misstatement question. Every single risk of material misstatement question or every AAA paper will definitely have risk of material misstatement. And the good news is, whether it's a September 2022 Winberry, whether it's a December 2022 Mercurio, whether it's from 2023 such as Hammer or Hart, maybe it's Mistral, maybe Speedy Style Company, maybe from the latest past paper question, whatever the question is, you can apply the same to same 4-step framework. Now, what is that 4-step framework? Step number 1, 4-step framework. Step number 1, you will identify or you will extract the relevant facts or the relevant information, not from your imagination, but directly from the scenario. So step number 1 is identify the relevant information from the question itself. And this is where many AAA students are very good. They actually identify the relevant information from the question paper. You want to type it, go for it. You want to use the copy paste technique, go for it. You must identify the relevant information from the scenario, and this is your step number 1. Step number 2, once you have identified the information, you must realize on your own. Examiner will not tell you. You must realize that which accounting standard or the principle needs to be discussed or quoted here. Your AAA examiner is not looking for a particular accounting standard number or a particular accounting standard name. So IAS 36. No. As a marker, I'm not interested. Property, plant, equipment. As a marker, I'm not interested. I am interested in the rule. So state the relevant accounting standard. So maybe you identified the information in relation to revenue, but you, rather than discussing IFRS 15, you started having a discussion on IAS 16 property plant equipment. No, you have failed it. No, you have lost it. So you need to state the relevant accounting principle, and you do not need to quote the standard number or name. If you want to, it's up to you. There are no marks for that. We are interested in the rule. So that's going to be your step number 2. Many students are so weak in the step number 2 that they end up spoiling the step 3 and the step 4 as well. Now, what about the step 3? This is the most critical step. Many of my AAA students, they identify the information from the question paper. They even write the accounting rule correctly. But when it comes to the step number 3, they tend to lose the plot. They somehow start having discussion on some other accounting standard. They sometimes they skip the step 3 and they directly jump towards the conclusion. So what is step 3? This is the most critical step. This is where you have to link the accounting rule which you stated with the information. So somehow you have to blend step 1 and step 2. And when you will start writing step 3, take a break and think, who am I? The auditor. So what is my role? I have to investigate the management's work. So what I have to be skeptic. So what management has done, or maybe they fail to do, which contradicts with the standard. So I have to, while evaluating the risk of material misstatement, I have to have doubt in my mind. There is a risk that there is a possibility. So you must express your doubts that why management's estimates or judgments could be wrong, why management's accounting treatment or whatever they have adopted is not in line with the standard. You might support your argument by certain ratios or trends that you, and clearly considering the fact the X ratio has also gone down, that also, makes me realize that maybe this is the case. So overall, this evaluation means you have to express your doubt. You have to doubt on the accounting treatment adopted by the management. You have to raise concerns, question marks, whatever doubt you have in your mind. You must support your doubt with certain ratios or trends if it is possible. And you can actually discuss the possibility of management bias as well. If there is a clear-cut case that management has adopted an accounting treatment which is completely irrational, and if there are certain bonuses attached with those manipulated figures, you can always discuss the possibility of management bias, and that can make you score 1 extra mark. You can score professional skill mark as well. Once you have expressed the doubt, once you have explained why you think that the client's accounting treatment is doubt, there is a risk that there is a possibility. Once you have expressed your apprehensions, yes, I believe apprehension is a good word. So once you have discussed your doubts in relation to the accounting treatment, in relation to the judgment, in relation to the policy adopted by the management, maybe having contradiction with the accounting standard, once you have discussed and once you have explored that, finally, you need to write the impact. If the client's accounting treatment is not in line with the relevant standard, if their judgments or estimates are not appropriate, maybe they are overly optimistic, if they have not made, if they fail to follow the accounting rule or the standard, as a result of that, there is going to be an impact. And we call it the impact on the financial statement items. So you need to write a separate sentence. You need to develop this habit that I will always write the impact separately. So if you are going to follow my instructions, you will write four different paragraphs for four different steps. The last paragraph is where you will discuss which financial statement items would be overstated, which financial statement item would be understated, or maybe some disclosure is omitted or incorrectly presented. So these are the four steps. My dear students, trust me on that. Step number one is always a single sentence. Step number two, most probably one small paragraph or maybe two, three lines of a sentence. Maybe you can have you can have discussion on multiple accounting aspect. So maybe two sentences. Step number four, usually one sentence. The real game is within the step number three. You can always have a full or a detailed evaluation. You can always raise doubts over the assumptions or the policies adopted by the management. So this is the four-step framework, and I am done with the section two. Mind you, we have to cover 5 sections. Assuming that all of us have fully understood the drafting technique. What is the drafting technique? Step number one, identify the risk of material misstatement from the question itself. Step number two, the accounting rule. Step number three, why is there a risk? You need to discuss or create doubts in your mind, and you need to write about the possibilities. Last but surely not the least, the impact on the financial statement items, including the disclosures. Section number three of this particular lecture. Now, in the section number four, I will be having discussion on 3 past paper questions: Winberry, Mistral, and Encore. But before I actually move towards the section 4, I think section 3 is far, far, far more important. Why? Because in the section number 3, I want to discuss the knowledge in relation to the IAS 36. So let's have a discussion on IAS 36, impairment of assets. Okay, before you can evaluate impairment risk in the exam, guys, impairment is a very, very common and a highly examinable area in your exam. Now, this section will provide you with the essential knowledge in relation to impairment. You need to be able to apply these rules under the exam conditions. Okay, now let's talk about impairment. Question number one, when we need, you are the auditor, I am the management. So do I need to apply impairment? When must an impairment review be performed? So these are the questions. Okay, rule number one, there is a thing called mandatory annual test. So we need to apply uh, mandatory annual impairment test on those assets which are not subject to regular amortization. So, for example, your intangible assets with an indefinite useful life, you don't amortize them. Goodwill, you don't amortize them. So, as a result of that, there is a thing called mandatory annual test, which is required for those assets that are not subject to regular amortization. Now, case two, we will only apply impairment test when there are certain indicators available. So what we call them indicator trigger test. So for all other assets, let's exclude intangible assets with an indefinite useful life and goodwill. Apart from these assets, all other assets will have an impairment review only when there are indicators of impairment. So we will not apply impairment test until or unless certain indicators are available. We will apply annual impairment test for intangible assets with indefinite useful life and goodwill every year. But apart from that, we don't apply impairment test unless there are indicators. And the indicators are, for example, there is a significant decline in the market value, or maybe your asset got physically damaged, maybe because of earthquake or flood. Maybe economic conditions or the legal environment has gone adverse for the company. So as a result of that, company might not be able to make the best use of the assets. So this is another indicator of impairment. Or maybe there is a clear-cut evidence that the economic performance has gone worse over the period of time. Or maybe a company has suspended or discontinued a product line, and as a result of that, the associated asset needs to be tested for impairment. So these are the common indicators of impairment, and if these indicators or any one indicator is present, well, according to IS 36, then we need to perform the impairment test. Now, we have understood when we will apply the annual impairment test. When we are not going to apply annual impairment test, we will only apply them when the indicators are present. Okay, moving forward, how are we going to calculate the impairment loss? Impairment loss arises when the carrying value or the book value according to the management is greater than the recoverable amount. So for example, if the carrying value is $500,000, but the recoverable amount is $420,000, it means carrying value is greater than the recoverable amount. So the balancing figure of 80,000 needs to be charged in the profit or loss account as an expense. And if the management is not going to do so, their assets would be overstated and their profit would be overstated as well. So how do we calculate the impairment loss? First of all, we make a comparison of two things: carrying amount with the recoverable amount. Now the question is, what is the recoverable amount? Because carrying value is the book value according to the statement of financial position. Maybe historical cost less accumulated depreciation, assuming they are using the cost model. What about the recoverable amount? Fair value less cost of disposal and value in use. So these two figures are considered. So management and even the auditor will consider two things. Number one, fair value less cost of sale. Number second, value in use. And the management and even the auditor will pick or choose the higher of. So for example, if the fair value is, for example, $420,000, but there is a cost of disposal of $20,000, so the net answer would be $400,000. But what if value in use is $380? We'll choose the higher of, which is going to be $400,000. What if the value in use is $480? We'll choose the higher of. So carrying value, how do we carry out an impairment test? We compare the carrying amount with the recoverable amount. And the recoverable amount is the higher of the two, fair value less cost to sell, and the value in use. So we need to choose the higher value among these two values. We'll get the recoverable amount. We'll compare the recoverable amount with the carrying amount. If the carrying amount is greater than the recoverable amount, it means the asset is actually impaired. There are few important things which you need to consider, especially if you want to crack the AAA paper. When management will calculate the value in use, this is a tricky part. Those assumptions must be reasonable, and those must be based on the most recent budgets or forecasts. So they can't use outdated data for that. They can't use unreasonable or overly optimistic assumptions while calculating the value in use. This is something where you have to create doubt in your mind. If management is calculating the value in use, they should always use the current condition of the asset. They can't assume that we will modify the asset and as a result of that, the working or the earning capacity will increase. No, do not include the future capital expenditure to enhance or improve the asset. No, while calculating the value in use, you have to use the current value and the current condition. For periods beyond 5 years, management should use either declining or zero growth rate, because for forever, your company will not have the growth. So you have to use steady or maybe the declining or maybe the zero growth rate. Similarly, the discount rates must reflect the time value of money. So you can't assume that the future value is equal to the current value. So you need to discount them as well. Now, section number 4. In the section number 3, we have explored what is IAS 36 impairment, and we finally understood, okay, there are certain mandatory situations for the impairment test. There are certain situations we will only apply impairment test when certain indicators are triggered. For example, these indicators, when we will apply the impairment test, we will make a comparison of carrying amount with the recoverable amount. Recoverable amount is the higher of fair value less cost to sell and value in use. There are doubts and question marks in relation to value in use. Even there are doubts and question marks in relation to fair value less cost to sell. If it's a unique asset, you can't sell it in the market. So maybe fair value might not be that easy to determine. If the asset has been completely demolished, maybe due to earthquake or fire, you can't have a value in use. So these are the things you need to keep in mind while solving the past paper question. I am heading towards the section number 4. Now, before jumping towards the past paper questions, please understand what are the risks associated with the impairment, because that is going to be part of your exam. Guys, what do you think? Your AAA examiner will ask you, write down an essay on IAS 36 impairment? The answer is no. What do you think? The AAA examiner will ask you, guys, AAA students, can you tell me when do we apply impairment test? When impairment test is mandatory? Write down 5 indicators of impairment. What is the carrying value, or how do we calculate the impairment? We make a comparison of carrying value with the recoverable amount, and recoverable amount is the higher of fair value less cost to disposal and value in use. No, examiner will not ask you such questions. This is not your FR or SBR exam. AAA examiner will share a story, something which is going on in the company. Maybe a AAA examiner will let you know that there are certain indicators of impairment, but management is avoiding impairment test. They don't want to perform the impairment test at all because they don't want to recognize the impairment expense, because there is a risk of breaching certain loan covenants, or they don't want to, they don't want to recognize an impairment expense because that will compromise the profitability of the company. This is how you need to think. Maybe they have performed the impairment test, but they have used overly optimistic assumptions when it comes to value in use, or maybe when it comes to fair value less cost to disposal. So think like an auditor. Management might avoid undertaking the impairment review. Why? Because they want to avoid recording the impairment expense. Why? Why they want to avoid? Because that will reduce the profitability. They might be having certain loan covenants. They don't want to breach them. Make management realize that the indicators for impairment are present. Thus, you can't avoid impairment review. Management will attempt to convince you. This is going to be your past paper question or your future AAA question. I'm telling you. The finance director will give you an explanation, will give you some reason. Management will attempt to convince you through various plausible reasons for not performing the impairment review. Maybe the director will say, no, we don't need to perform annual impairment review because we are already covered with X reason, Y reason. We don't think so. We had a similar incident 3 years ago, but everything went smooth. We are covered through insurance. So the question itself will tell you or will highlight certain indicators of impairment. But then again, the director or the management will come up with all plausible reasons for not performing the impairment. Those reasons would be wrong. One of the most commonly tested attempt is using a future insurance receipt as a reason not to recognize an impairment loss. The director would say, I agree that this asset is impaired, but I am confident that we will cover the loss through the insurance proceed. In fact, we are already having positive conversation with the insurance provider, so we are not going to recognize impairment. Now, is this a correct accounting approach? You can't do this. This is wrong. So the accounting standard 16 rule is what you need to know. According to I-16, property, plant, equipment requires that the impairment of an asset or derecognition of an asset or any subsequent insurance compensation be treated as separate economic events. You can't club them, you can't net them off. So you can't settle them with each other. You cannot net off an expected insurance receipt against an impairment loss. Guys, please read this sentence all over again because this is very common in the AAA exam. Your director, your finance director, the client's finance director will let you know that we are not going to recognize any impairment loss because we are fully covered because of the insurance. The impairment must be recognized immediately when indicated. The insurance receivable is recognized only when it becomes receivable. Even if the insurance has been received, still you cannot net off impairment with the insurance. Impairment and insurance proceeds are two different economic activities which must be recognized separately. You can't net off these transactions. I'm moving towards the fifth and the final part of this particular lecture, where I will be discussing the drafting technique with the help of the past paper question. So whatever we have studied so far in relation to the drafting technique, identify the risk from the question, discuss the accounting rule, discuss why you think that the client's accounting treatment is wrong, why there is a risk. So you must evaluate, you have to raise doubts and question marks. Finally, the impact on the financial statement items. And then carrying value, if greater than the recoverable amount, well, you have got impairment, and the recoverable amount is the higher of fair value less cost to disposal and the value in use. And insurance proceeds cannot be settled off or netted off with the impairment expense. Okay. Read this sentence. The following three worked examples are drawn from the real ACCA AAA past papers. So these three past papers are available through the VIFHE LMS. These are available through the master file. Which three past papers? I'll let you know. For each, you will see the scenario extract. So you will extract the information from the question. You will apply the step-by-step technique. You will discuss the rule. You will discuss why there is a risk. Finally, the impact. And as a result of that, you will create model answers for yourself. Let's go for the first example. And guys, the first example is the most difficult among the three. I've got three examples from three different past papers. All of them are full 50-mark questions. But let me tell you, the first example is the most difficult one. And that is why for the first example, I will not ask you to write the answer. But for the second one, I will ask you to write the answer. So let's go for the first one. Let's see whatever we have studied, does it make sense or not? So the question is called Winberry. It's from September 2022. Part B, evaluate and prioritize the significant risk of material misstatement to be considered in planning the audit for the financial year ending 30th September 20x5. There are 16 marks for that. You should refer to all exhibits. You've got 1 minute. Please read this portion as well. No surprise, it is 1st July 20x5. Who are you? You're a manager in the audit department. You're responsible for the audit of Winberry Company. It's a listed entity. It's an existing client, and the client's year end is after 3 months on 30th September, and you are planning the audit. Okay, guys, are we all ready for the first scenario? Here we go. You have got a couple of minutes. Think about it. Read it on your own and think about it. Before you actually start reading it, this is the framework which you need to adopt. You will identify the facts or the scenario from the question. You will discuss what IS 36 says. You might discuss the recoverable amount. You might discuss the comparison of carrying value with the recoverable amount. You might discuss what is fair value less cost to sell. You might discuss value in use. So this is your step 2. And then a lot of why there is a risk. Mind you, you might have to discuss the insurance as well, right? You might have to say that according to I-16, these are separate economic events. And then finally, if the client is not going to make the necessary adjustments, or if your doubts are correct, there will be multiple impacts on the financial statement item. So this is the framework which you need to apply. You've got 1 minute. Please recall the framework. You've got 1 minute. You have got 1 minute to recall the framework, and then We are heading towards the first question. Let's go for the first question. Why don't you read it on your own? Why don't you try it? Evaluate and prioritize ROMM. That's your scenario. You've got 1 minute for that as well, or maybe couple of minutes. In January 20x5, guys, you've got another couple of minutes. Please try, please think about it on your own. You can actually score 4 to 5 marks out of this scenario using the same framework. In January 20x5, there was a fire in one of the Winberry company's 5 warehouses, which completely destroyed the premises. Okay, after reading the first portion of not even the first complete, but fortunately, no staff were injured. So I realized that they had 5 warehouses, but one of them was completely destroyed. What do I mean by completely destroyed? It means probably the value in use is nil. And I've got doubt what's going to be the fair value of that warehouse, considering the fact it's completely destroyed. The warehouse services the northern region of the company's customer base. Okay. The finance director has not written down the carrying amount of the warehouse in the property plant equipment. Wow. Good for him. As he is confident that the company's insurance policy will cover all the costs, which means I will not only discuss when do we apply impairment, how do we calculate impairment, I will also discuss the fact that insurance policy cannot be net, you can't net off with the impairment expense. The insurance company has confirmed that they will repay the company for the inventory lost during the fire. However, the claim for the warehouse building and machinery is still ongoing. I don't care. The company was able to utilize their remaining 4 warehouses. Okay, guys, I am done with my first step, and this is where I have identified certain pieces of information, such as this one and this one. I was not interested in the fact whether no staff was injured, the warehouse services, northern region. So it's up to you. If you want to type it and you have got electrifying speed, good for you. Otherwise, you can always use copy paste technique. So I am done with the step number 1, and I have identified the risk of material misstatement from the question paper itself. One of the warehouse got completely damaged and destroyed during the accounting year, that is in January. Mind you, today is July and 1st July, and the client's year end is after 3 months. So during the year, one of the property got destroyed, and the finance director has not removed it from the non-current assets. So no impairment has been recognized. Okay, step number 2. I've got a 4-step framework. Step number 1, identify the risk of material misstatement from the question paper. Step number 2, discuss the accounting rule. I'm not interested in the name or the number of the standard. If you could write it, good for you. There are no marks for that. According to the relevant standard, or according to IS 36 impairment of assets, asset must be tested for impairment whenever there is an indicator that their carrying amount may not be recoverable. Guys, please try and understand. I am not unnecessarily showing off my accounting knowledge. I'm not discussing what about the assets having indefinite useful life. I'm not discussing goodwill or a brand having intangible useful life. I'm not discussing those assets. I am discussing the later part of the standard where there is an indicator for the impairment. So according to the IS 36, asset must be tested for impairment when there is an indicator for the impairment. When there is an indicator that the carrying amount may not be recoverable, or when there is an indicator that the carrying amount might be greater than the recoverable amount. What is recoverable amount? Now, once you have used this terminology, you have to write the recoverable amount is the higher of the fair value less cost to sell and the value in use. You have successfully discussed IS 36, and that too to the point. Perfect. No unnecessary discussion. For example, you did not discuss what about the IS 36 in relation to the assets having indefinite useful life. No, only to the point discussion, because the question says that there is an insurance claim already going on. I had to go on and discuss another accounting standard. Guys, this is where you need to be smart. If the question had no discussion whatsoever in relation to the insurance policy, trust me on that, I would have ignored this particular portion. But because question is having a discussion on the insurance proceeds, I need to discuss that according to IS 16, impairment losses and insurance. You can say according to the standard, or you can simply say impairment losses and insurance proceeds must be treated as separate economic events and they can't be netted off. It's not permissible to net them off. Is this clear? So if somebody is wondering that this is a lengthy answer, you can always squeeze it. Impairment losses and insurance proceed must be considered as separate economic events, and they are not permissible to, it is not permissible to net them off. It's not allowed to net them off. That's it. As a result of that, you will score more marks. Not if somebody is going to write just this as compared to both, I'm sure students are going to get more marks by having discussion on multiple accounting standards. Now, the standard says you will apply the impairment test when there is an indicator of impairment, when there are indicators. The question itself says that the warehouse is completely destroyed by fire. So it is a clear-cut indicator of impairment, and therefore an impairment test is necessary, and management cannot avoid this obligation according to the standard. Now, when they will apply the impairment test is the comparison of carrying value versus recoverable amount. Don't talk about the carrying value. Talk about the recoverable amount. And when I say recoverable amount, you need to discuss the fair value less cost to sell, and you need to discuss value in use. Guys, given the fact that warehouse has been completely destroyed, what do you think? What is going to be the fair value less cost to disposal? I think it's going to be nothing. It's going to be negligible. So the management has to potentially charge everything in the profit or loss account as an expense. This is going to be nothing at all. Definitely, it's going to be well below the carrying amount. What about the value in use? Again, the question says it has been completely destroyed. So I don't think so the warehouse will be able to generate future cash flows in its current state. Now, this is where students lose the marks. It is not allowed to assume that we will rectify or we will make amendments. No, when you have to judge the value in use, you have to take what? The current state. So according to the current state, without rebuilding, well, I don't think so that there is going to be any anticipated income or any value in use of this asset unless the management is going to apply a lot of capital expenditure. So as per the current condition, this asset has got no value in use. So I believe fair value less cost to disposal is negligible. I believe value in use is zero. So it means as of now, I believe that the whole carrying amount, whole carrying value of the asset needs to be charged as an expense. But guess, wait. There is a thing called insurance policy as well. The finance director has assumed that no impairment should be recorded because insurance will cover the cost. You have to discuss why you think that the client's accounting treatment is wrong. You have to discuss why you think that this is not in line with the standard. The impairment loss on the destroyed warehouse must be recognized now according to IS 36, and the insurance proceed must be treated as a separate economic activity or a separate event. You can't net them off. These are two separate transactions in two separate periods. If management is not going to recognize the impairment expense As a result of that, their tangible non-current assets would be overstated. Simultaneously, within the profit or loss account, their profit would be overstated as well without the impairment expense. Additionally, if the management has recognized a receivable in relation to the insurance proceed, which means the assets would be overstated as well. I am done. I know this might feel an extraordinary or an ideal answer, but guys, trust me on that. Without even attending my lecture, without even attending this lecture, you already know more than 60-70% of this content. There are few things which you need to grasp and you need to absorb. Insurance proceeds and impairment, you cannot net them off. It is not permissible. Similarly, when you discuss the value in use, you must take the asset in its current condition. These are few tricky things. Otherwise, you know everything. And when you will rewrite the same answer right after this lecture, you can always squeeze it 10 to 20% and you will end up scoring more than 3. I believe you can score 4 marks minimum out of this, because there are two accounting standards involved. There is a very huge discussion in relation to the evaluation of the audit risk, in relation to the evaluation of risk of material misstatement. We are discussing fair value, we are discussing value in use, we are also discussing insurance proceed. So you will end up scoring 4 or maybe more than 4 marks. Guys, are you absolutely clear of in relation to this? If you are absolutely clear, let me give you a summary. Whenever there is a discussion in relation to impairment, always ask few questions. Is there an indicator of impairment? One of the warehouse got completely destroyed by the fire. So it means, yes, there is an indicator of impairment test. If the asset, well, there are few mandatory tests for impairment as well, such as assets having indefinite life or goodwill. But apart from that, we always look for indicators. For example, in Winberry question, one of the warehouse completely destroyed, that's an indicator. Number second question, has management avoid doing the review? Yes, according to the finance director, we are not going to perform impairment test because we are not going to charge the impairment test because we believe insurance policy will cover. Call out the avoidance. Figure it out. Explain why their reason is wrong. This is not in line with the standard. This is not in line with the accounting rule of IAS 16. Their reasoning is not appropriate. Is management citing insurance as a reason? If they believe that insurance is the reason, that is again wrong, and that we need to discuss the fact that those two events are two separate economic events and you can't net them off. What about the fair value less cost to disposal? Always remember, fair value less cost to disposal only exists for assets where there is a market for that. If an asset is unique and there is no market for that, you can't have a discussion on the fair value less cost to sell. In that case, you need to have a discussion on value in use only. And for value in use, always remember, assume the current state of the asset. So what about the value in use? Whenever management is using value in use, evaluate whether the assumptions are realistic. In this question, Winberry question, we don't have to discuss much on value in use because they are not even applying that rule. Are the cash flows realistic? Are they based on the assets on the current standard, not enhanced? So these are the important questions which we need to consider. Common management bias scenarios. Management will always say insurance will cover. That violates IAS 16. So you can have a discussion on that. You can score marks. Management will say we have got a plan to rebuild or restore the asset. Well, again, that is not allowed according to IAS 36. You can't take value in use with the rebuilded or restored asset. What if there is no active market, so we can't measure the fair value less cost to disposal? Well, this is true for some intangible, but value in use must still be calculated. Even if you can't calculate fair value less cost to disposal, you need to evaluate the value in use. Make sure that the assumptions are reasonable and not unrealistic. Make sure if a product, maybe management will claim that the product defect is a minor and will overcome that. You need to have doubt over that assumption. Maybe management is appropriate, but most probably they are manipulating the situation. So finally, we are done with one example from the past paper question called Winberry Company. And I think it's time for us to go towards another past paper question, which is from the year 2025, the one of the most recent past paper question, Mistral Company. No surprise whatsoever. It is 1st July. You are an audit manager. You are assigned to the audit of Mistral Company, a listed entity, financial year ending 30th September. It's a new client. The company operates in a renewable energy industry and specializes in manufacturing and installing wind turbines for use in onshore and offshore wind farms. Okay, requirement. Using Exhibit 2, 3, and 4, evaluate and prioritize significant risk of material misstatement to be considered in planning the audit. Okay, so this is the information, and you have got couple of minutes. Now you have to apply this whole framework. So you have got couple of minutes. Do it. Read the question at least. Exhibit number 3. The Bice wind farm has been partially shut down. Uh-oh. Why? On 28th January, okay? During the year. The Bice wind farm has been partially shut down due to what was described as a design defect on some of its turbines manufactured by Mistral Company. So Mistral Company designed certain turbines. They had a design defect, and as a result of that, the Bice wind farm is completely off. The Bice wind farm has 25 of its 35 turbines currently out of use. So out of 35, 25 are not in use. The turbines have been identified as the Z1 model produced by Mistral Company, the latest incident to affect the model. Mistral Company has suspended all sales of the Z1 model until these problems are rectified. Mistral Company is hoping to fulfill existing customer orders with their older, less efficient wind turbines. So clearly the Z1 model is impaired. Exhibit number 4, meeting notes. The company recognizes costs in relation to the development of wind turbine model as an intangible asset. So they developed the the Bice wind farm turbines, and they must have recognized it as an intangible asset. It's called the Z1 model was finalized at the beginning of 20x4 and went into production from 1st February 20x4. The company amortizes the intangible assets from the date when the model went into production. The amortization period is over 15 years, as that is the average life of an installed wind turbine. So clearly this Z1 has got indicators of impairment. Guys, you have got 2 3 minutes. Please, you're more than welcome to use the chat box. Use the 4-step model. You've got 5 minutes. Write down your answer. Step number 1, identify the issue from the question paper. Step number 2, discuss the accounting standard or the accounting rule. Step number 3, discuss why there is a risk of non-compliance with the standard. Why you think that the management assumptions could be wrong. And step number 4, impact on the financial statement items. You have got 5 minutes to do so. Please do it. Use the chat box. Write it down. Please write it down for yourself, write it down for me using the chat box. Step number one, you will definitely identify that usually the company recognizes the full development cost as an intangible asset once it is into the production. So they must have recognized Z1 as an intangible asset from 1st February 20x4. But there is a design defect in the Z1 model. Even 25 out of 35 turbines at one wind farm are of no longer use, and the company has suspended all of its sales. So this is a clear-cut indicator of impairment. Step number two, you need to write about the accounting rule or the accounting standard. Which accounting rule or which accounting standard you will discuss? You will simply discuss that according to the standard, an impairment test must be carried out when there is an indicator that the carrying value could be greater than the recoverable amount, and the recoverable amount is the greater of fair value less cost to sell and value in use. What is the value in use? Value in use represents the present value of the future cash flows expected to be derived from the asset in its current condition. I'm done with the step number one. I'm done with the step number two. Do I need to discuss insurance proceeds and the fact, do I need to discuss I-16 over here as well, along with the I-36? Let's go for the step number three and let's express the doubt. Who are we? The auditor. So let's express the doubt. Considering the fact there is a clear-cut indication of a defect in the Z1 model, and as a result of that, even the sales have been suspended, this is a clear indicator of potential impairment according to IS-36, and that is why an impairment review is mandatory. And whatever the cost they've capitalized needs to be impaired or needs to be evaluated for impairment. Now, how do we calculate the impairment? We need to make a comparison of the carrying value with the recoverable amount. And what about the recoverable amount? Let's talk about the fair value less cost to sell, and let's talk about the value in use. And in this way, we will score maximum marks. Now, given the fact that Z1 model is a company specific intangible asset, guys, Mistral company developed this Z1 model only for a particular company. So, what do you think? Is there going to be an active market for it? Absolutely not. So it is going to be nearly impossible to obtain a reliable market value less cost to disposal. So practically it's impossible. So we have to ignore the fair value less cost to disposal, and we must focus on the value in use. So value in use will be the primary. So you can't write off the fair value less cost to disposal in your mind. You have to write it in your answer. What about value in use? Considering the fact that Z1 sales have all been suspended, and the future cash inflows attributed to this assets have all been stopped, management's projection of future cash flows become highly uncertain. In fact, probably nil or very low value. If management applies overly optimistic assumption, for example, assuming that the defect will be quickly resolved and cheaply resolved, this could cause value in use to be overstated and the impairment to be understated. So if management is going to use any overly optimistic assumption, as a result of that, value in use would be overstated. So it's highly doubtful that what is going to be the value in use, whether genuinely a very minimal uh, cost would be allocated for the for the there is an issue which needs to be resolved. So if management is not going to perform the impairment test, and if they're going to apply overly optimistic assumptions, especially in relation to the value in use, the tangible non-current assets would be overstated, and the profit or loss account would be overstated as well uh, because they're not going to charge the impairment expense. That's it. I hope this is not going to be difficult for you, especially after covering the Winberry. Once you have thoroughly prepared Winberry for the impairment, this Mistral company becomes a piece of cake. You've got couple of minutes. Please read it. In the meantime, start reading from the first step, step number one. In the meantime, let me check out the chat box because Zeeman model impaired, copy paste. As per I-36, amortization must be done over the useful life and not the average life of an installed wind turbine. Moreover, Zainab, you need to write that the impairment needs to be recognized when the carrying value is greater than the recoverable amount. That is very important. And the recoverable amount is the higher of. Okay, number three, there is a risk that amortization cost is not calculated appropriately as they are charging it on average life. No. It's not that. It's not they're charging it over useful life, average life. It's just that they are not recognizing the fact that 25 out of 35 turbines are down, and the sales have been even stopped as well. So there is a need of applying the impairment test. Zainab, you are going in the wrong direction. So amortization expense in the profit loss is understated, and the profit. Guys, Zainab is saying amortization expense in the profit or loss account is understated and profit is overstated. No, this is one and the same thing. What about the tangible non-current asset? You have to say amortization expense in the profit or loss account is understated and the tangible non-current assets are overstated. Amortization expense is understated and profit is overstated. This is one and the same thing. That is why it is important for you to write the answer. Now, I'm sure Zainab is going to pass the paper because she was bold enough to write the answer, although she committed few mistakes, but I'm sure she is going to learn from her mistakes. Okay, I've got an interesting question in the chat box. Is it mandatory to assess both the value in use and fair value less cost to sell? Yes, absolutely yes. But it is not mandatory to discuss insurance unless there is a discussion on insurance in the question. Is it okay? On step one, is there one risk identified? And if I had copied and pasted the design defect, wouldn't? Yes. It was about the design defect only. Yes. As a result of that, the problems are going on. Guys, we have covered another past paper question called Mistral. Please, it's a request. Read the step number one again. You can always summarize this one into one sentence. Please read the step number two again and acknowledge the fact that I have not discussed insurance proceeds because there is no information relevant to the same. Please read the step number two. Please. Now, please read the step number three. The discussion on impairment leading towards the recoverable amount, and finally discussion on fair value less cost to sell and value in use. You have got couple of minutes. Please read the step number three. Don't take it for granted. Don't waste your time. Please read the step number three. It is more or less like Winberry, but it's just that in Winberry we were discussing a warehouse which was completely destroyed. Over here we are discussing a Z1 model based upon a certain research and development expenditure, which is recognized as an intangible asset, which needs to be impaired because the sales have been stopped. There are faults in the design. Fair value less cost to sell would be nil. Value in use might be overly optimistic. And finally, the impact. Zainab, you too. Please read the impact. Once you are done with the step three, please read the impact. Once you are done with the step three, please read the step four, which is impact of the risk. If management will not perform the impairment review, because as per the question, I'm not sure whether they are going to perform or not. In the Winberry question, the finance director clearly said, I will not perform the impairment test. Over here, I'm not sure whether they are going to perform or not. Or maybe they will perform, but with an overly optimistic assumptions in relation to value in use. So I'm clueless. So I will express my doubt. If they will not perform an impairment review, or if they will perform impairment review with overly optimistic assumptions, in both the cases, the tangible non-current assets in the statement of financial position would be overstated and the corresponding impairment expense If not recognized, as a result of that, the profit or loss account would be, well, the expense would be understated, or you can say profit will be overstated. But what mistake Zainab did? Zainab wrote about this one, all right, but Zainab missed this portion. You have to discuss both the impacts on the statement of financial position and the profit or loss account. Guys, let's go towards the third and the final question, and we will be done with this risk of material misstatement in the context of IS 36 impairment. You have got couple of minutes. Read the question from December 22, I guess. Okay, so it is 1st July 20x5. The client's year end is 30th September. The company builds and designs what? Boats which are used in fishing industry. So these are specific boats. Each boat is created to specific customer order. So it's going to be nearly impossible to determine the fair value less cost to sell, because probably there is no market value. It's a customized boat. Well, I'm assuming that. Let's read the question now. Using exhibit to evaluate and prioritize significant risk of material misstatement, 18 marks, 18 technical marks, followed up by professional skill marks. Guys, you have got couple of minutes. Do it, please. And I will be happy if you guys are going to write the answer using the chat box. Please write it. Yes, you're absolutely right. You can write it in the chat box. On 15 June, today is 1st July, so 15 days ago, a severe storm, thunderstorm, thunder, thunder, thunder. A severe storm caused damage to the company's dockyard property with a carrying value of 108,000, and two boats which were being stored in rented spaces at the dockyard by customers were severely damaged, but the damage has not yet been quantified. Gavin, who's Gavin? Probably the finance director, believes that the company's insurance, again, insurance, that's great, extra 1 or 2 marks, will cover the cost of repairing the property. These are two separate events and it's not permissible to net them off. And he has not adjusted, thank God, he has not, he's a good boy, not adjusted the carrying amount of the property. Okay, he has recognized, oh my days, he has recognized a receivable and deferred income of 110,000 relating to. So I can also have a discussion on IS 37 as well. To the claim, you can only recognize the intangible asset, or you can only recognize a contingent asset once it's virtually certain. Though the amount is not likely to be received until, so it's not virtually certain as of now. Guys, are you there with me? Can you attempt this particular part on your own? And I'm sure you can score 4 to 5 marks. Take your time. I'm giving you 4 to 5 minutes. Please try it by yourself. Please try it by yourself, please. Use the chat box. Yes, the storm damage is an indicator of impairment. Two boats were damaged as well. Dockyard along with the boat, not just the dockyard, okay? Okay, you've got couple of 3 minutes, 5 minutes. Take 5 minutes. Write down, don't press the enter button unless you are done with all the 4 steps. Yes, physical damage is a clear indicator of impairment, and the asset is considered as impaired when the carrying value is greater than the recoverable amount, and the recoverable amount is the higher of blah blah blah. And according to I-16, second standard which you will discuss, according to I-16, you will discuss the fact that the insurance proceeds and the impairment expenses are two separate economic events which are you are not permissible to net them off. And third accounting standard which you will discuss is in relation to IAS 37, where you will discuss that a financial asset or a contingent asset can only be recognized when it is virtually certain. So this is your step number two. I hope everyone has recognized that step two is going to be really overwhelming. Identify the severe storm, impairment test, I signal impairment loss insurance. Well done, Thelma. Aminat, accounting rule as 36. Abdul Zaid, the related standard asks for impairment of an asset might have factors of loss exam value. Okay, as 36. Ah, Khevna Patel, you're doing good. So you have discussed I-36, I-16, but what about I-37? I-37? Guys, in the first question which we discussed, Winberry, there was a discussion on I-36 impairment, but because there was a discussion on insurance, we discussed I-16 as well. In Mistral, only I-36. In this question, Encore, IS-16 property plant equipment, IS-37 provision, along with IS-36 impairment. Can you write yes in the chat box if you have understood why three accounting standards and which three accounting standards and how they are relevant? Which three accounting standards? In the step number two, IS-36 impairment, IS-16 property plant equipment, and IS-37. And how they are relevant? What needs to be, what you need to write in the step two? Can you write yes in the chat box? Why I-16? Because you have to discuss the fact that the insurance proceeds and the impairment are two separate economic events which you are not permissible to net them off. Why I-37? Because you need to discuss the fact. Okay, why I-37? Because you need to discuss the fact that a contingent asset or a financial asset can only be recognized when it is virtually certain. I'm not discussing this is not the case. I'm just discussing what the standard says. This is step two. I'm not discussing step three right now. Guys, I believe we are done with the step one and the step two. I'm not heading towards step three. Let's read the step two now. You have got 1 minute. Please read the step number two. This is your step two. Read the step two, please. I-36, I-16, I-37. My dear AAA aspirants, please realize in the step number two, you don't express your doubt. You don't create question marks over the management's judgment or assumption. You don't raise eyebrows or question marks. You just state what the goddamn standard says. So you just write what the standard says according to 16, according to 36, according to 37. Please write yes in the chat box if you are absolutely crystal clear with the step two now. Thank you, Shehryar Bajwa. Well done. Well done. Well done, Bajwa. Okay. Thank you, Brian. Thank you for your encouraging words. That's great. Guys, now use these three, use this. Guys, use this and write step three. Use this and write step three. Use this and write step three. What is step three? Why is there a risk? Why you think that the client's accounting treatment in relation to this is wrong? Why you think management's assumption or judgment is wrong? Why you think client's accounting treatment is wrong? Why you think that the client, whatever they are doing is not in line with these standards? Take your time and write down the step three. Anyone can write the step four. It's the step three which makes the difference. But only those can write step 3, those who are clear for the step 2. Without having clarity on step 2, you can't write step 3. If you are good with step 3, step 4 is a piece of cake. Write down the step 3 now. Please write down the step 3. You guys are done with the step 2. Now you need to write step 3. If on the final exam day, if somebody is going to give me these 3 guidelines, under IS 36, under IS 16, under IS 37, I can easily write my why there is a risk for each one of them. IS 37 is the easiest one. The director has recognized an asset of $110,000, right? The director has recognized a contingent asset of 110,000. So this one is easy. The 110,000 insurance receivable has been recognized by the director, but this amount is expected to be recovered until November 20x5. And the claim appears to be still in process. This is me writing why. Now I have to express my doubt. This receipt is not virtually certain. I have to write why I think there is a non-compliance with the standard at the year end. So this receivable should not be recognized. Its recognition may be premature. So this is me scoring 1 mark. Now let's discuss I-16. Even if the insurance company is fully committed to pay them off, still according to I-16, it is explicitly uh, it is it's not allowed that you are going to net off these 2 transactions. So management is incorrect in treating them as offsetting items. So they should not go for this offsetting. And then finally, impairment. The storm damage is a clear indicator of impairment, and IS 36 requires an impairment test to be performed. Management failure to do so means, on the basis of insurance proceed, means that the tangible will management's failure to do so on the basis that insurance will cover repair costs is an error. So this is not in line with the standard. Finally, if they are not going to recognize impairment, their tangible non-current assets would be overstated. Moreover, if they are going to offset with the insurance proceed, that is not allowed, which means financial statements would be overstated and their receivable would be overstated as well. Deferred income would be overstated as well. Guys, you have got couple of minutes. Please read this portion all over again, and then I will ask a question. Read it again. Start reading from the step number 1 till the last step. You have got couple of minutes for the step number 1, step number 2. Please do it. I'm heading towards the last 5 minutes of the session. So please, you have to respect and you have to read the step number 1 and the step number 2 all over again. I'm assuming you are done with the step number 1. So boat got damaged, 108,000 value, which the same amount they have recognized. Now read the step 2. Now the step 3 and the step 4. Over to you. Please read the step 3 and the step 4 right now. Remember, we always identify the risk of material misstatement from the question paper and then we develop the point. Every risk of material misstatement in the AAA exam follows the same structure. Whether it's Winberry, Mercurio, Hart, Hammer, Magenta, Speedy Style, Mistral, Adams, Crux, you name it. Every question follows the same structure. It's you, the students, who tend to deviate from the drafting technique. My request would be master this four-step technique for impairment and then apply the same logic to any other accounting area, whether it's the revenue recognition, whether it's IS 37, whether it's the government grant, revenue, provision, depreciation, whatever it is. Examiner is not looking for a memory test. Examiner is not looking forward to your accounting knowledge. Examiner is looking for your ability to read the question, pick up the relevant accounting standard, write about it, and then clearly explain why you think that there is a risk of non-compliance with the standard, why you think that the client's accounting treatment is wrong, why you think that the client's or management's assumptions or the decision they have taken of not recognizing impairment, electing insurance proceed as a compensation, why you think this is wrong. So once you are done with this lecture, and once you will follow my instructions and you will type Winberry, Mistral, and Encore all over again at least 3 times each, you will be absolutely well prepared for the drafting technique of risk of material misstatement in relation to the question number one. Your technique will be so strong with the help of these 3 questions that you will start enjoying multiple other questions as well. You will become absolutely clear for IS 36, and that will give you a roadmap for the future questions and for multiple other accounting issues as well. Definitely, I will be creating multiple such documents where I will be covering multiple past paper questions and other accounting issues as well. So this is how you need to answer your questions. Please remember, it's not about just identifying the risk of material misstatement. It's about full evaluation. And when I say evaluation, it means what is the accounting rule or the standards relevant to it? Maybe one, maybe two, maybe 3 standards. And then why you think that the client's accounting treatment is wrong or could be wrong. You need to doubt the management assumptions or the assumptions or whatever policy they have adopted. And then finally, you will write about the impact on the financial statement items. So I've got a question, sir. You said no need to mention the standard name and number, so that means you will just state the standard. Yeah, you will say impairment is recognized when the carrying value is greater than the recoverable amount. So you don't have to say according to IS 36. You can simply cut it off. Sir, you had not talked about the management bias in the examples yet. Well, it was not possible, but at the end of the day, you can always have a discussion that you can always write it that there is a risk that management would not wish to recognize the impairment expense because their profit is attached with a year-end profit figure. Their bonus is attached with a year-end profit figure. That is how you can score one professional skill mark as well. Okay. Sir, if the accounting treatment is incorrect, then we cannot say there is a risk. Yes, you will say that the accounting treatment is wrong. Yeah, you're right. I think I've answered all the queries in the chat box. If not, please post it all over again in the chat box. Guys, this is it. If you will practice a bunch of questions, such as my top 10 or top 8 full 50, top 10 full 50 mark questions, using the same principle and using the same methodology and using the same pattern, I'm sure you will be absolutely well prepared for a definite question. This is a confirmed question, which is called a risk of material misstatement question. I really hope so that this lecture was helpful for you. Now, on this note, I would like to take your leave. And this is it from my side. Thank you very much. And yes,
Sir,
thank you very much for
when
any
will
concern.
the updated master file be shared?
Okay, as far as the updated master file and the planner document, which I discussed in the today's session, I will definitely share the Give me a second. Yes, I will share it in all the groups. Don't worry. For the enrolled student, it is already available through the VIFHE LMS. The new, well, it will be available tomorrow morning, not available right now. So for the enrolled student, it will be available from the tomorrow morning. And for others, for those who have not joined the batch, I will share it personally through the WhatsApp. Don't worry. Any other concern or question from anyone? Shahrukh Rahman has got a direct message. Sir, you are superb. Now I have a confidence that I will pass this session. Yes, you will. Guys, thank you very much for your kind words. And I really hope so that this session was beneficial. Intentionally, I did not discuss any past paper question, well, a full past paper question in this session. Tomorrow, I will explore a full past paper question. This session was a different session. This session had a lot of hard work at the back end of this lecture. So this document, although this document seems to be very simple, but it has a lot of research supported. This is not an ordinary document. This document is backed up with a lot of research. And this is not fluke. This is a sure shot drafting technique coming straight from the AAA examiner. So if you will follow this 4-step approach where, what are the steps? Step number 1. Yes, you will get this document. Why not? This document is going to be part of the new master file. What is the step number 1? Identify the risk of material misstatement from the question. Step number 2, write down the relevant accounting standards. Let me say the plural. Write down the relevant accounting standards. Step number 3, write down the relevant why there is a risk. Why there is a risk. Why you think that the client's accounting treatment is wrong. Why you think that the management assumption is wrong. Or why you think that whatever client has adopted is not in line with the relevant standard. Finally, step number 4, impact on the financial statement items. In the tomorrow session, I will be heavily focusing on business risk along with a full 50-mark question. I will try to do so. Thank you very much for your kind words. Are we able to get this document? You will get this document right after this session because I will share it personally through the WhatsApp groups. Along with that, this document is going to be part of the new master file as well. Please attend the lectures where I've discussed the answer fix framework for the risk of material misstatement as well. Answer fix framework where I've discussed PD style company. Those who have got the access of the LMS, please attend my lectures. Speedy style company. Number 1, answer fix framework, speedy style company. Lecture number 2, where I've covered the speedy style company as a general. Answer fix framework means what mistakes students commit. So thank you very much, guys, for your kind words. Thank you, and thank you very much. Thank you, Noor Hami. Thank you for your kind words. Thank you. Bye bye. Thank you. Take care.